There is a beauty and clarity that comes from simplicity that we sometimes do not appreciate in our thirst for intricate solutions. Dieter F. Uchtdorf. Intricate solutions. That's what so many times people look for. If it's simple, they want to make it complicated. That is what we refuse to do here. We refuse to be slaves to things that don't make sense, that are so complicated they don't work, that they cause analysis paralysis, which again plagues so many people in trading and investing. What's the right time to get in? Not yet. What should I do? Should I go to the 1-minute chart, the 5-minute chart, the 10-minute chart, the 15-minute chart? I'm not sure. It looks like it's backing up. It's going down. Oh, I missed it. That is not what we play here. Weekly vertical crossovers are our mainstay, week in and week out. And then once we have that weekly vertical crossover, we look to ride it as long as we can, pumping it back and forth when opportunities present themselves. What did we see happen today? We saw things going exactly the way that we thought they might yesterday. We saw that the indicators verified the support and the resistance, depending on which way things were going. The resistance for further up moves in stocks, the S&P 500 down over 3%, the Nasdaq 100, the S&P down 2.57%, the Nasdaq down over 3%, bonds up 1.65%, gold up almost 2%. Beautiful. Beautiful. Things going exactly as we want them to go as we move further and further away from the summertime trading zone and the crappiness of the heat and the low volume, and we move into the transition zone and then into the desirable fall-winter trading zone. If you are a Patreon supporter, special training that we put out to you today, teaching you how to judge stocks and ETFs as to whether or not they are tradable, they are chartable. Very, very valuable training that we just sent out to our Patreon members. You want that training? You want to be a Patreon supporter, help support the work we do here at the channel and all the costs associated with it? We would so appreciate your help. Follow the link in the show notes. Depending on your level, you'll even get a free book. So again, check that out. If you hadn't purchased our book, Charting Your Way to Wealth, it's your chance to order it. 12th Printing just sent out bunches of copies today along with trader journals, and we so appreciate you buying those too. Now don't forget, trade worksheet, daily market worksheet, weekly market worksheet are available in PDF form. If you'd like a spiral bound copy, 3 months worth with the trade worksheets, daily market and weekly market worksheets, all in a handy spiral bound 8.5 by 11 format, we've got copies for you. You get a discount if you buy a year's worth. So again, my friends, thank you for all your support. Let's jump into these charts. I like it when things are going the way we want them to. We ended the week on the S&P 500, just like the Nasdaq 100 that was up on the screen beforehand, with a red spinning top. That means some indecision tending down. The indecision comes from the wicks, because the solid red down candles with a wick on the bottom, clearly down movement. When you have some push on top, you have resistance to the down move with an up wick. That again makes it less decisive in the down movement. As far as our price percent oscillators goes, no indecision there, none in the derivative oscillator, spiking down, beautiful, moving down after, of course, our weekly vertical crossover all the way back 2 weeks ago on the 9th of August. After that, the week ending the 16th of August, we had a green, solid green candle, which again means some slowing in the down movement, which is seen by the price movement there, but again, didn't obviate the downward pressure as we were talking about that yesterday. And of course, then we saw over the course of this past week, red candle forming with the down movement that we had particularly at the end of the week. And again, things are looking quite nice. We go from the weekly chart to the 2-day, and again we have another red spinning top. And as we look at that candle, don't forget that this latest candle is now fully drawn after a green up candle for Tuesday and Wednesday. The Thursday, Friday candle is a red down candle, but again with that big wick on top. But we can see that the price percent oscillator spiked over, going down. Derivative oscillator still losing some downward momentum. We go to the 4-hour chart, and of course, beautiful, strong down move. What did we tell you to look for? We said, hey, if we go all the way back to the 8th of August, we can see that we've had a ceiling somewhere around 293, somewhere around that mark. And of course, what happened was things bumped up once, twice, 3, 4, 5 times, really 6, 7, 8 times, and then rolled over. We told you to watch to see what would happen on Friday. I got comments, nothing's going to happen. Ain't anything going to happen without blah, blah, blah. Well, you know what? You were wrong. Things spiked over, going down, testing that low again around the 284, 35, 36 mark, actually going all the way down to where it had gone before, somewhere around the 183.50 mark or so. So 283, I always want to say 183. I'm sorry, I always get that wrong on the S&P. But that is what we're seeing again. We did have a crossover in the afternoon on the 4-hour chart going down. So those of you who jumped in the afternoon, okay, again, watch for things. For those of you who want to follow the rules, watch for things on Monday morning after idiot hour to see if there is a jumping in point for you there. Those who had stayed in, maybe you sold part of your position after that initial move down. Things are trying to heat up and get you back into a really beautiful profit scenario. So that's where we are on the S&P 500. Nasdaq 100, similar but a little bit different. Red spinning top, price percent oscillator, derivative oscillator heading down after a prior green solid box candle the prior week, showing some slowing. We then on the 2-day chart, things spiking down hard on the price percent oscillator, derivative oscillator still losing downward momentum. Red spinning top, just like on the S&P. And that 4-hour chart actually crossed over in the morning, didn't it? Right there, crossing over into the afternoon. Some of you may have jumped in the afternoon. What was our last on the noon candle? Looks like it was 285.49, something like that. Where did it end up the day? 282.07. So again, not bad, not bad. Looking pretty good. We will continue we'll take those profits as they roll in. Hope that you are practice trading as we move along. Again, those of you looking to jump in, do check things out on Monday morning. Might not be too late. Remember, the real power is always in that initial move on the down move when we see that weekly vertical crossover. Now, we're going to go from stocks to bonds, which heated up again. This red open box candle turned into a green one by the end of the week. But you do notice that the wick on top this week, not as high as the wick in the prior week. Nonetheless, derivative oscillator heading up, price percent oscillator gaining upward momentum. That's good to see. We look at the 2-day chart, and we still see that sideways slide in bonds, even with it being up over 1.5% for the day. That latest 2-day candle is a red spinning top, almost a doji indecision, tending down, derivative oscillator losing momentum, but that price percent oscillator heading up at a steeper angle. That's good to see. And what did the 4-hour chart show us? Even with that bump up, didn't cross over going up for us. Going to need more energy to knock that baby over. Price still below the 2-day trend line. So we'll keep our eye on bonds. Hopefully things will heat up more as the week moves along. Again, watch things. Let's see how Monday starts. Let's get into gold. What is going on with gold? It is pushing up. Let's check it out. Looks like we got a higher high. High last week, 144.02. High This week, 144.33, so made it a little higher. That's good to see. Prices above the weekly. We're going to check out that 2-day in just a minute. Price percent oscillator heading up. Derivative oscillator still losing a little bit of momentum. We go to the 2-day chart. What does that show us? We see things trying to move up, and they did move up higher. Box is not as big as the prior green box back on the 15th with the 44.02 high. And we look at the high so far, 144.33. So that's nice where it punched up. We can see that the derivative oscillator still losing momentum. Price percent oscillator had been heading down and has started moving back up again. That is good to see. But as far as where we drew our chart, we can try to redraw another 2-day trend line. Can't really connect 3 candles at this point, but we'll continue to see what we can do as the new week starts. We go from the 2-day to the 4-hour and getting really close to a crossover going up on gold. Let's see how Monday progresses. Remember, we ended at 144.17. So again, sometimes these prices, and it looks like it hit a high in the morning of 144.23. Sometimes these candles can get a little screwy when we're looking at prices, but it looks like we actually did blow through in the morning the 144. Remember, with the highest we'd hit was 144.04, I think, before. We pushed up through that, and in the afternoon, 144.33. So again, that's nice. We're pushing up through the 144, which was the highest that we had gotten to before. That's nice to see. Keep your eye on the prize Monday morning for what happens with gold as far as a crossover on that 4-hour chart. Again, gold's got a lot of ways to go up. We're going to range out gold a little bit so you can see back how high gold has been when it reached its high of highs, somewhere around the 184.82, something, or 185.85. So again, we've got a ways to go from 144.17, but it's going to take time. It took time for gold to ever reach that high. We'll see if gold's going to spring up, just how high it will go as markets roil and things are crazy across the world with negative interest rates in Europe. And of course, China slowing, Europe slowing, recession talk in the air. But don't forget, the Fed still has a bag of tricks to keep these bubbles going in both the stock market, the bond market, and the real estate market. When they do finally pop, it's going to be catastrophic. And again, great training at the website about the coming market crash. Are you ready? We are working very, very hard on a training to bring to you a 3-month training. It's going to teach you not only technical analysis, which is what we talk about here on a daily basis, charting, but mastery of options, and then mastery of creating your own personal wealth fund. And of course, with options, you don't have to have a huge nest egg. You can build that up if you know how to read a chart and know how to use options. We're going to be teaching all of that in our intensive 3-month course, getting you ready for what is coming. We don't simply want to survive the coming market crash and catastrophe. We don't just want to survive it. We want to thrive during it. Fortunes will be lost, but we're going to be making fortunes. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.